everybody. My name is Luis Galvez, Technical Marketing Manager with Wolters, Kluwer Tax and Accounting. And joining me today are Ross Sullivan and Greg Jansen, tax policy experts from the Brownstein Law Firm, to provide insights on recent tax news and updates from Washington, D.C. In this episode, we'll provide an overview of the business-related COVID-19 relief and tax extenders provisions, with an emphasis in the employee retention tax credit. And so, Ross, I understand that Congress believes that this provision will grant $15 billion to businesses across the country to cover part of the payroll costs for businesses adversely affected by COVID-19. Can you tell us how Congress decided on this provision and how it fits into the broader bill?
Well, Luis, this was the one business tax provision that had broad support among Republicans and Democrats and members of the House and the Senate. The provision was in CARES, and in the CARES Act, it was mainly a provision designed to encourage employers to keep their workers on the payroll, even if they didn't have much work for them to do, rather than them going and getting unemployment. However, with the expansions included in this omnibus bill passed in December, the provision will provide more broad relief for employers, essentially a subsidy for part of the payroll costs for their employee base for the first 2 quarters of 2021, provided that they had some adverse impact from the coronavirus in terms of their receipts.
Okay, Ross, so who qualifies for the CARES ERTC and what periods is it available for?
Well, it's available for 2020 with one set of rules. You can see that on the left side of this chart. 50% of qualified wages, the tax credit is equivalent to that, with a maximum of $10,000 in wages as the wage base. But the new one in 2021 has expanded in 5 different ways. First, the tax credit percentage is increased to 70%. Second, the wage base that qualifies for the credit is extended dramatically to $10,000 per quarter. Third, the rule about how much your receipts have to drop in order to qualify has been reduced from 50% in 2020 to 20% in 2021. Fourth, there is an expansion of the credit for employers with 500 or fewer employees. And finally, the 2021 version eliminated some of the disqualifiers that were applicable in 2020.
Thanks, Ross. So these all sound good on the surface. Can we dig into the details a bit more? Or do we have to wait for Treasury guidance like we did last time?
Hey, Luis, there actually will be there is some Treasury guidance that's expected to be forthcoming on the interaction of the PPP loans and the employee retention tax credit. But this latest act did provide a lot of clarification on questions that were in the original CARES Act. And let's get into these examples. So how much? For the first 2 calendar quarters of 2021, the ERTC is worth 70% of $10,000 of wages per quarter, or a credit of $7,000 per employee per quarter. And so looking at this first example, if we have an employee who receives $10,000 of qualified wages in Q1 and $20,000 of wages in Q2, the credit is going to be $7,000 in Q1 for that employee and $7,000 in Q2, as we look to the maximum of $10,000 of wages per quarter and 70% of that amount. Now, if we flip this and these numbers were 2020, the maximum credit available would be $5,000, and that would be all used up in Q1 because it's limited to 50% of $10,000 for the entire year. So that represents a pretty significant expansion. And now if we look at who is eligible, it's for employers whose business is either fully or partially suspended during the year due to a COVID-19 government order, or it's when there's what's called a significant decline in gross receipts. And this also represents a significant expansion for 2021 because, as opposed to the 2020 credit, where a 50% drop in gross receipts was required when compared to the same corresponding quarter in 2019, only a 20% drop in gross receipts is required. Further, you've got a couple measuring options. So for 2021 Q1, to figure out if you have a 20% drop in gross receipts and you qualify, you can look at your Q1 2021 receipts and compare those to Q1 2019 to see if there's a 20% drop, or you can look at Q4 2020 and compare Q4 2020 with Q4 2019. And if there's a 20% drop in either of those options, then you have a significant decline in gross receipts and are eligible for the credit. Another thing to point out is that 501c3 organizations were eligible for the 2020 and the 2021 credit, but government employers and instrumentalities and state governments were not. But for the 2021 credit, there's a couple exceptions that are made to allow hospitals as well as public universities that are government owned or state entities to be eligible as well. And lastly, self-employed individuals are still not eligible for the credit for wages paid to themselves. But to the extent that they have employees, they absolutely can qualify for the credit.
Thanks, Greg. It sounds like even if a business did not qualify for the ERTC for 2020, they may qualify for 2021. So can you please go into more details about qualified wages and the 500 employee threshold?
Yeah, absolutely. So there were, in addition to those expansions we just discussed, in the original CARES Act, there was some limitations if an employer if they had 101 or more full-time employees in 2019. And what those said essentially is that qualified wages will only count for the time that an employee is not working or providing services. And qualified wages are what you'd think of as typical wages, but they also include qualified health plan expenses, which are employer and pre-tax employee amounts to maintain a group health plan. But what this act did is it bumped up that limitation from employers that had 101 or more employees to only apply to businesses that had over 500 employees. So significantly more companies are able to avoid these limitations and restrictions. And so, if you are in 2021 a business with 500 or fewer employees, you're going to be able to get qualified wages for amounts paid regardless of whether or not the employees are providing services. And we'll get to an example on the next slide. One other item to point out is there was another limitation in the CARES Act on large employers, those with over 100 employees, which said if you give your employee a raise, those raised amounts are not going to be eligible for the credit. And it was, a disincentive to provide raises to employees. And this act completely wipes that out. So, there's still a restriction that for large employers, it needs to be associated with the time they're not providing services, but raises are fully allowed and encouraged and will qualify.
That's right. Thanks, Greg. And Russ, you mentioned that some of the disqualifiers have been removed. What are they?
Well, Luis, the main disqualifier that's been removed has to do with recipients of the PPP loan. In 2020, the law stated that businesses had to choose between the PPP loan and the ERTC. They could not get both. However, in this legislation, Congress said both going forward in 2021 and going back to 2020, a taxpayer can get both a PPP loan, get it forgiven, and get the ERTC. Now, they can't do it using the same wages for both the PPP loan and the ERTC, but as long as they've got additional wages separate from the 2.5 months that qualified under the PPP, they can claim both. This is significant because for tax return preparers, entities may have assumed they can't claim the ERTC in 2020, and so they would not have withheld from their payroll taxes to fund that credit. Instead, they will need to claim the credit on their return they're filing for 2020. So tax preparers should ask their customers whether they got a PPP loan or not. If they did they claim the ERTC for 2020? If they have not thought about that, they need to go through that process and see if they are eligible. Now, on the other hand, Congress did put in some specific rules saying you can't double dip on these wages. In other words, they can't qualify both for the ERTC and another tax credit in the tax code, like, say, the research credit on the same wages. It would have to be separate wages on which those two credits are based.
That's right, Ross. And finally, Greg, I know a lot of businesses who had to furlough workers continue to cover their healthcare expenses. Do these expenses qualify for the ERTC?
Hey, that's a really good question, Luis, and thank you for bringing that up, because this was a source of a lot of confusion when the CARES Act was originally passed. The IRS came out and released subsequent guidance and Treasury that says, yes, you can have qualified wages if you're just maintaining a health plan and not paying any other wages because you have furloughed workers. And this act makes really clear that that is permitted. And in this example here, we assume no other wages are being paid, but an employer is maintaining a group health plan for its employees that comes out to $10,000 per employee for the year. But if you divide that by the 250 working days for the year, it comes out to $40 a day. And so if we assume that an employee works only 100 out of 125 days, but still receives its health plan benefits, then we look and we first have to decide, well, are they a large employer or a small employer? Because we know for small employers, it doesn't matter whether or not the employee is providing services, all of those amounts will count. So that 125 days for Q1 and Q2 times that $40 a day is $5,000 of qualified wages, and 70% of those are going to qualify for the credit, up to a maximum of a $7,000 credit. Whereas with the large employer, if there's over 500 employees, then only the time when the employee did not provide any services, those 25 days there, because he only worked 100 out of the 125, are going to be qualified for the credit. So doing that same math of the 25 days when he was not providing services times the $40 is $1,000 in qualified wages, and 70% of that gives you your $700 credit.
That's right. Thank you, Greg, and thank you, Ross, for sharing insights on tax policy information tax professionals should keep in mind as they educate their taxpayer clients. You can download all the information shared today by visiting engagetax.wolterskluwer.com/Washington Tax Updates. We'll continue our video series with part 3, where we'll discuss the economic impact payments in detail. So stay tuned for more updates. Once again, thank you, Ross and Greg, for joining us today, and thank you everybody else for watching. Bye-bye.